Thanks very much for that, Will, and very good morning to you. I managed to speak with India's largest state-run lender, that is State Bank of India, touch base with Mr. Dinesh Khara, who's the chairman of the bank, to get his sense on the exposure that they have to the Adani group and how they're managing that risk. First and foremost, he highlighted that the loans that they have extended out to the group are well covered and are well provisioned for. In fact, this is what he had to say about Adani's cash flow situation and the assets that they have made the loans against.
I think it is more of a conjecture as of now. We have already seen that only yesterday they have repaid about $1.1 million equivalent of loans to various entities, and for that they are not approached any of the public sector bank. So it very clearly means that they have enough cash which is available to them. And in fact, all I can say is that in various accounts, the drawings are actually much less than the limits which have been mentioned. So that is again another reassuring fact that they have enough cash.
In fact, I asked Mr. Khara specifically whether state-run banks, PSU banks, public sector banks that is, in India were willing, and especially SBI, were willing and ready to step in and step up if indeed foreign institutions cut back their exposure to the group, which is what he was highlighting, saying that essentially it's a matter of conjecture right now, but the cash flow situation looks pretty stable and they haven't been approached for more funding by the group. The other angle that I touched upon with Mr. Khara about was the contagion risk for the infrastructure sector. The funding pipeline is that at risk of drying up? This is what he told me.
Out of this 20,000 crore worth of active which was there, 16,000 crore was essentially for the projects which had to come up in future. And for that, they had not approached any of the bank for the time being. And also it was only showing up the equity for meeting out their obligation for setting up those projects. It might have some impact on the implementation of those projects, but it is too early to really estimate what will be the impact.
So there you have it, Will. Some important questions that we asked the top lender in the country that has exposure. Now, their total exposure stands at 0.88%. And if you look at their quarterly results, they delivered their best ever profits this quarter, in the quarter gone by, that is. And despite that, the stock did not see much of a reaction. It's still down 10% year to date. So I think investors will take some more time to build their conviction and come back in.
Tanvir, I wanted to ask you as well, because you're speaking to the top lenders and you spoke to the top leaders in energy over the course of the week, but there continues to be reports about the pressure being applied to the Prime Minister, Modi ji. Is that palpable where you are in India right now? Is there a lot of expectation that he's going to have to do something with all the pressure that the opposition's putting on?
Well, politically speaking, I think right now the finance minister said that, they pretty much distanced themselves, the government, from this issue, saying that this is a private entity's problem and the regulators are doing what they have to. SEBI, which is the market regulator, is overseeing the situation, as also the Reserve Bank of India has assured investors that the financial sector is stable right now. There is no risk to the stability of the financial sector. So from that standpoint, the only communication we've had is that there's nothing in this situation that can rock the boat and lead to a crisis of confidence, even though we are in one when it comes to investor sentiment. But like you pointed out, Will, the stock has recovered. There's been a major short squeeze. And the interesting part over here is that there's a valuation argument to the story more than anything else. Yes, there's a business case. Yes, there's a layer of political links. There's also investor, a conviction issue that we have to deal with. But at the core of it, I think it's a valuation story. And when valuations look more attractive and more reasonable, given the debt profile and the debt burden that this group has, I guess investors will reassess whether they want to get back in, because at the end of the day, infrastructure projects in India are highly leveraged. There's no taking away from that. That's actually not just the case in India, that's the case world over. And the multiplier effect of those projects is very significant, which is why they're very, very growth accretive as also are very good for job creation. So from that standpoint, I think we're watching the situation very closely. And as of now, Adani Group has had a good track record in meeting their debt obligations. So the risk is not so heightened. And the stock price seems to reflect that, the comeback at least in the stock price for now.